How's it going, everyone? It's Tim on the buzz with you all the way till 3 p.m. Now, I've been talking to you about how it comes to, what type of finance considerations you need to make when you're expanding a business, how you need to think, how you need to, avoid mistakes or, problems that you could actually come across later down the line, right? So to actually add to this, now what I'm going to talk to you is about, when you're financing a company, when you're expanding a company, when you're looking at these are the questions you actually need to talk about or consider. So Tom Saki basically is a finance analyst, and he also, just like our conversation with Chris Jones, he too talks about how you need to consider that your dreams are important, your dreaming is important, working hard is important. At the end of the day, this world runs on money, right? Like, that's inevitable, and I think that is a known fact. People are coming into understanding that that is an important point or factor in our life. So we have Samad coming in. Hi, Samad. Appreciate you messaging or commenting on this. Stay tuned on our conversation here so you can actually let us know what your thoughts are, and feel free to ask me questions while I run you through this conversation here. Now, when it comes to your finances, or if you are running a company, you need to understand that your dreams are important, and apart from just dreaming about it, you need to come to a point where you understand where you'll actually come to 2004. If it's Christmas, or if it's rapidly approaching, this could actually come to a point where you are scaling up a TerraCycle. And then there is always, you have a 2-year-old selling, venture selling squid worms, or fertilizer in PET bottles. So far, successful distributing through lots of smaller retailers, but they've basically encountered with a lot of flood rejections from the big box stores. And then undaunted Saki finally laid a 15-minute. And then basically this guy, now Tom Saki has basically spoken of how the drop off phase of the earth has basically, it's been in Walmart Canada. And for every one of his stores, he recounts it in his engaging book. And archiving, or I'd say, when it comes to achieving his dreams quickly, he talks about how he needs to handle the huge volume increase. And then fortunately for Saki, he says he's already laid the groundwork for financing supporters or suppliers, and then working with equity investors and others to allow them to double the stress in 2 months. Now, with the stress, he also means sales. But to add to this, I want you to actually stay tuned here. Feel free to ask me questions, comment on this video, ask me, let me know what you actually want to know. And feel free to add to the conversation. We at Relax Radio, we keep everything positive, we keep everything to the vibe, and then just make sure that everything is all right for you. So what we're going to do is, I'm going to put you into a couple of videos so you understand who we are and what we do at Relax Radio, and I'll be right back with you very soon. Okay, so coming back into the topic, that's right. I mean, you need to know that Relax Radio is with you. If it's on the App Store, if it is on Google Play, we're just a call away, and talking to you about how it comes to the points where you're growing a business as a businessman or an entrepreneur. It's important for you to do your math or your finances and put those all into calculation when you're growing, right? So to add to this, what I'm going to do is talk about how when you're coming to conventional wisdom, when you're talking about the most dangerous period for entrepreneurs, it's not when they start up from scratch, but when they scale up for growth, right? So when you start up, there's relatively little to no mistakes. Mistakes are fixable, and a small amount of cash or a cohort, when it comes to your colleagues, or when it comes to going a long way. But when you suddenly accelerate and grow, whatever your company's age is, things get really hot really fast, right? And I mean, this is just what we were talking about with Chris. So you need to understand that, when you're exploring, when what most entrepreneurs do is, whether they are startup, spin-off, or smaller companies, they are basically risking a lot more in scale. Now, there are some ways in how you can basically keep the heat of the net growth from melting you down, and this is basically through multiple sources of finance. I mean, so many entrepreneurs who are propelled to into a sudden growth trajectory, they are basically in the lines of thinking, if mostly about raising or risk sharing equities, investment from venture capital firms. These are private equities or angels, right? And then when you scale up, it is faster to grow. You are more feasible and less dilutive. And then when you go apart from that, you have more investors cobbling together financing, a form of combination of equity investors, banks. You have public funds, suppliers, credit cards, customers, and even employees who will take stock options in lieu for some cash, right? But talking further, you've discovered the $100 or a penalty to defer, when it comes to California sales or so, right? But actually taking talking a cheap source of financing, it doesn't really make a glamorous story as such. So raising $5 million from top tier venture from Valley venture capitalist, or how it comes to financing, there is a lot of consideration. So cross leveraging your money from one source to another of cash, this is basically I'd say it is a challenge, because you need to look at which is going to give you more ROI, which is going to give you a decent sense of opportunity or workload. So just like I say, to the risk investors, the bank debt, these mean that there is a very conservative, and I'd say, yes, an experienced sense of watching your time or your growth coming in, right? But to add to this, you need to understand that every investor also sees debt as a cheap way to leverage their returns. So when you're talking about this, you as a startup or as an entrepreneur, you need to understand that when you do get some equity investment, rather than looking for more time, or looking for the same story, there are immediate talk to the bankers. And when it comes to the state funding agencies, the more conservative lending institutions, particularly with investors, and these lenders whose interest is in securing the viability of your growth, right? Now these guys, I mean, my personal take is, you as the founder, you as the visionary of the organization, or you are the spark of the fire. You basically, you or your partner or your partners, right? You guys basically knew what you wanted out of this, knew what you wanted to grow out of it, or where you wanted to get to. So what's important with you is to keep reminding yourself of, this is just my opinion. So what I think is, you need to keep reminding yourself of where you want to go. But definitely, like I said, this world runs around money, so you need to understand that things are going to come into a quantitative line, speaking different dialects with different capital providers. These are, when you do crossover to talk to the bankers or other financiers, you need to understand that you can say your venture capitalism, your firm is growing up fast, and you can be happy about the opportunity. But then you need to talk about how banks might not care about the opportunities in the abstract. They do care about the opportunities that basically repay their interest, or their principal plus interest, on time, or securing the debt with the assets that they seize. So these are, all types of considerations that need to be followed. Now, banks or economic development agencies don't really care about the opportunities in abstract. But when you're talking about your IP, talking about the problems you solve, talking about investors or funding yourself, you need to understand that this is a further style of growth when it comes down the line. So what I'm going to do is, actually, I've got another couple of processes or methods that you need to consider when you're actually growing as a startup, and financial considerations that you need to make. So what I'm going to do is, I'm going to get right back into this, but I'm going to show you a couple of videos of who we are at Relaks Radio and what we do. Stay tuned. That's right. So we are back on the buzz. I'm talking to you about everything, entrepreneurship, tech, business, and the economy. Right now, to add to the conversation around, you need to be opportunistic about raising money. Now, of course, when it comes to both business and school, rather, there is, a real life experience that teaches you, you know, how you can basically scale up rapidly. And when you're piloting a sailboat, and this is basically in open waters, right, running along the fixed tracks, like he says. And then when you're actually looking at time to devour, the passes that are being made around, many as an entrepreneur have passed down, only to regret it later. And as an investor, I see quite a few ventures that tail from running out of cash. And I yet to have see, venture fail from dilution, he says. So when you're talking about, raising money, another thing is important is that you need to manage your finances, or you need to look at other ways in how you can earn money. I mean, as long as there's cash flow, everything is positive, right, at the end of the day. So managing accounts, for one, is like a receivable hawk. But these do pay on time. Now, in the company, there is Eisenberg. They've developed a 90-day rolling prediction of their daily account balances. And to add to that, people do pay on time. People do talk about, managing the forms of the most firms. And when you're adding to the conversation around becoming, if they are, meticulously paid, suppliers, that were cash rich, and then adding to supplier financing, the powerful hidden source that was, when it comes to times that are bad, you need to understand that there is a much secure, time in these instances. But then lastly, to add to this, what people are saying is you need to cultivate finance for the customer. But when you're financing the customer, you need to understand that, the flip side of supplier financing is to ask your customers about financing. So you understand, I mean, there's so many other ways that you can consider when it comes to increasing their satisfaction. Because at the end of the day, your cash flow is your customer satisfaction. Your long-term cash flow is also how important it is for them to know, that you are a reliable source, that once they've invested in you, the second or the third investments are the ones that count, in my opinion, right? Because when you're talking about the future, you need to guarantee yourself of long term, cash flow, to also look to grow, and then look to increase your net, your income, or your put. You need to know where your money is going, right? So to secure financing from your customers, you need to understand that, apart from just necessarily understanding what deeply their needs are. I mean, this is, present or future. You need to know, okay, you need to keep innovating, because things in the lines of tech or innovation is changing at the fastest pace than, in the history. And if it comes to just, simple things like social media, you had MySpace a while back, at least a decade and a half, I'd say, ago. And then Facebook came along. Facebook killed the game then. But then 5 to 6 years later, Instagram came, and Instagram killed the game then. But now we've got TikTok, we've got Pinterest, YouTube. There's so many new platforms, in terms of, even if it comes to networking. There's so many. LinkedIn, you get Telegram, you get Discord. These are big companies as well, right? Now, we know that, when you need to understand, how you need to communicate with the market, you need to understand which type of markets are actually, on these platforms as well. So now more than ever, there's so many different types of platforms. Just like for the gamer market, there is another platform called Discord, and these guys are looking at, partnering with Microsoft for about $20 billion, right? And then to add to that, in contrast, now if you're talking about supplier financing, these are, there's customer financing that is, usually more feasible when it comes to good times, because the customers have cash on hand. And then when you're going down the line into, understanding if your address is unmet, for example, if your suppliers want a reliable long-term customer who pays, predictably, you need to understand. Now these are big factors as well. So customers basically want to have the most advanced technology, and these also have to give them a competitive edge. These are, I mean, the world, unless you have the only type of product, only product in your market, you need to understand how and why you stand out. And apart from the successful entrepreneurs keeping their eye on cash flow, they have a broad range of capital sources. And when it comes to cash substitutes, you need to know that later on in life, there is a second startup or a second generation family venture. A thoughtful way as to how flexible you are or plain you are on a scale up version, right? You need to understand, you need to allow yourself to grow fast and be responsive or thrive. But with that being said, what I'm going to do is I'm going to actually narrow it down to just 5 topics that I spoke about. Firstly, you need to multiply your sources of finance. The second one is cross leveraging money from these sources of income. So I mean, if you are following these two, you need to, I mean, you'll see that these give you a lot of, I mean, long term benefits, right? So I mean, also it gives you, if you are looking at an investor, if you are looking at raising, if you are aware of these things, it's definitely going to, I mean, give you the guarantee, or it's going to give you that confidence. It's going to give them that confidence to invest in you, because you've actually looked into these you've actually considered these. So that shows how mature you can be as an entrepreneur or a partner, right? And then talking in different dialects with different capital providers, because I mean, putting all your eggs in one basket is not the good idea, just like Warren Buffett says, right? And then you need to be opportunistic about raising money. Finally, apart from customer cultivating or customer financing, you need to manage your accounts like a receivable hawk, and also pay on time. Because this also, I mean, it's not always the case where you are the customer. I mean, if it is your employees, if it is your suppliers, you're like Chris said in the show before, you depend on them. You need to invest in these people as well. So as dependent as you are on them, regardless of how much you have to pay them, you need to make sure that their needs are also met, because at the end of the day, it's all a dependent cycle, right? So with that being said, I'm going to wrap the show for now. But what I'm going to do is I'm going to be back with you with more topics on the buzz at 12 noon. Right now, this is Relax Radio. I'm your host, Tim. I'm with you all the way to 3 p.m. from 12 on weekdays. And what I do is I bring business, tech, entrepreneurship news to you. So if you want to know what's going on in the world, if you have anything, if you have, I mean, because we are on the App Store, we are on the Play Store, Facebook, Google, Instagram, we are on this platform. So it's just easy for you. We are investing in a way where it's easy for you to, reach out to us. You can just let us know which platforms you prefer. Feel free to comment, like now. But we've got Nick coming in on the show next, and he's going to give you a lot more real talk. But till then, I'm going to give you some videos to know who we are and what we do at Relax Radio. Good evening.